Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Assalamu alaikum wa rahmatullahi wa barakatuh. This is going to be my Elliot Wave count for pound, yen, pound, dollar, and gold. But first of all, any views, opinions, or suggestions that are expressed in this video do not constitute to trading or financial advice. So let's get started here on pound yen. Obviously, from last week, what I said was that the pound yen will eventually sort of go up a little bit higher, then start eventually coming back down to give us a sort of minute level, minute sort of fourth wave degree, but it's basically the third wave of the third wave in the high degree. So let me just make that a bit more clear. So we have a wave one, a wave two, and then we're gonna obviously expect 5 waves in a wave three. We have a wave one here and wave two. Alright, so wave one, wave two. Then we have a 5 wave impulsive again for our third wave in our third wave high degree. So we're getting a 1, 2, 3, we're getting a 4, then a 5. That will give us a 3. Then we'll get a deeper correction into a 4. And then we'll go up again to a 5. And that will give us our third wave completed. So we have our 1, 2, 3. Then we're going to expect a deeper correction, possibly coming back down to sort of hit that trend line or the parallel channel again. And that should basically be around 38%, but shouldn't go more than 50% with retracement of wave 3. And then we're going to get one more push up to the upside to give us that fifth and final leg, which will complete this fifth wave. And then from there, we should start expecting to see the market eventually just push down for hundreds of thousands of pips. So that's sort of my long-term view of things. Now with this pair, it is a bit, hard to trade, I would say. Um, Especially when it comes to like these long moves, you're just waiting for that perfect correction to get back in, and you might not even get it for a long period of time. Like all of these entries right here were nice. This one was nice. This one was nice. These take long for them to come before you start seeing some huge movement in the market until you get your next correction. But overall, um, I would say for this week, I'll probably look for maybe the downside to eventually come in a little bit. But I would also say that just be a bit careful, because even though we might get a downside, we might get one more up, and then we go for an even huge correction to the downside. It's just going to be moving up and down and up and down, I think, for the next week or 2 weeks or so. So take your time with this pair. The overall trend, in my opinion, is still towards the upside. So I would definitely be following the trend and look for the buys instead of the sells. At the same time, we are also very, very high up. We are definitely coming towards these levels. That's what I can probably say. We are definitely going to head towards these highs. Um, and that's basically going to be it. So I feel like we might get a push to the upside, and we won't see that sort of level being taken out yet, because then it will result in a longer wave for correction to come in, and then we'll get that push up. So people probably will start selling here very early on, not realizing that this will be a wave for correction to get one more push up and take out all those people that started to sell out early on before we then get that huge sell. Okay, so take your time with this. Don't overdo it. Let it play out how it wants to play out, and we take it one wave at a time. So let's go into gold. So gold's been moving nicely, just like I said last week as well. We're getting that sort of correction to come in eventually, and obviously we have a nice A B, or so you can say A B C, or in my opinion this is a W X Y. So W and X, and then we're coming here for A B C into a wave A, and then we're getting a another corrective move back down again to then go back up. All right. And once that happens, doesn't necessarily mean we're gonna start selling. I still think this is gonna be a long ass correction. So after that, we might get another three wave move back down again, and then go up one more time, and then shoot down. Okay. And the reason why I say that is with how this market is moving, if we have a complete impulse 1, 2, 3, 4, 5 wave move, usually it goes into a nice deeper correction. We should see a rejection of around 50 to 61.8%, and this will basically give us a wave 1 or a wave A, and then this corrective move that I'm predicting will give us a wave 2 or a wave B, if that makes sense. An A, B, C, or a wave 1, wave 2, followed by a third wave impulsive move, or a C. All in all, I would say for this week, look for the upside. Um, we are correctively moving to the upside, and although on the daily time frame, um, the daily time frame obviously shows us that we are quite bearish. So ideally, the sells are the sort of the winners at the moment. Um, and this is a correction. So this is where if you're gonna trade this correction, remember a lot of people do tend to make a lot of mistakes during this. So be very, very careful. If you wanna get the best possible setup, I would suggest just being a bit more patient with this commodities pair. Let it hit that 50 to 61.8%. Let it give you that price action confirmation, and after that, once you've drawn like your nice channel, you could possibly see this market eventually, give you a nice setup. Price action here, let it break through that channel, let it consolidate a bit more, another price action, 1, 2 confirmation, and then you start selling. That's my sort of go-to setup. So, you know, if you guys want to get in here, then that's up to you. But for me personally, I probably would taking it one wave at a time. And since this is a correction wave, I personally don't like trading wave twos or wave fours. It's just corrections. It's just mess, and it's where a lot of people just make mistakes. However, I know some people are just too eager to make money all the time, and I know I've been through that myself. It's just part of the game. I would say just try to sit on your hands as much as you can and just practice doing that. you know, try to practice a bit more patience. But at the same time, if you guys are good at counter trend trading, then by all means go for it. Just make sure I would recommend not to risk that much. Just have a small risk, um, and just make any small little chump change that you can make. Um, for me personally, if I was to look to get into this in terms of the short term, I'll wait for that sort of correction to come back, and then probably look to buy it with my stop loss just there, very tight, small stop loss, risking very, less than 1% or something, half a percent, and just look to buy it like that, and look to sort of buy it within the range, within the range, just let buy it, buy it until eventually you get like a nice price action confirmation, and we eventually start getting a huge impulse move to a downside breaking, and we're creating obviously from higher highs to then lower lows. Then we can start to say that alright, the market's definitely changed direction, and we're going to start to see the market heading towards the downside. But all in all, short term upside, long term downside. So let's go into pound dollar. So I said on my last video as well, pound dollar, we're gonna eventually hit towards the upside, and we did. I took a trade, and alhamdulillah, I made some money. I hope you guys have made some money too. And where do I see this happening now? So obviously, as this is an ending diagonal, right? We have an ending diagonal where the wave one is extremely long. There's the wave two. The wave three is much more short than the wave um, one. Then we have the wave four, and we're getting this wave five. This will only validate as an ending diagonal if the wave 5 is shorter than the wave 3. Okay, wave 3 has to be considered as one of the longest. Now it doesn't necessarily mean it has to be longer than wave 1. So long as this level So we measure from wave 2 to wave 3. We get that, we move it to the wave 4. So long as that level, which is around the 131, I would say close to the 132, but in and around this level, so long as this level is not invalidated, because that is basically the same length as of the wave 3, and we start to fall short and then start going down, then this is considered as an ending diagonal. It's validated as an ending diagonal. This is just the insight of the sort of mentorship that I provide, right? I don't want to really want to give away too much, but you know, this is how we measure it in terms of Elliot Wave principle. All right. Um, in terms of where I see the market going, now we are heading in that last fifth wave in the ending diagonal, and that will complete the overall fifth wave in the higher degree. Where do I see this happening? Well, essentially, we have a market structure break, which just broke towards the end of the week, which is pretty nice. And where I see this market eventually heading is, although we have reached the top here, we could possibly start to see the market just fall down, and this could be the wave 5 right here. This is it. That could possibly be it. That's one scenario. Now, it doesn't necessarily mean I'm asking you guys, I'm telling you guys to sell it here. No, no, no. You guys are in control of your own accounts. I'm not in control of your accounts. But what I'm trying to say is we don't just sell it here straight away. That's stupid. The way I would, if the market starts selling all of a sudden from here, the way I would trade it is wait for this wave 4 to be broken right here. This market structure is a wave 4. Wait for that wave 4 to be broken, and then we start getting a correction up, and then we look to sell it. First price action confirmation, second price action confirmation to give us our entry on the lower time frame, higher time frame price action confirmation, 1 hour price action confirmation, and then we can look to sell it with our stops just above there. This is also risk management as well. Alright, so you know, don't just look to just sell it right here as soon as the market opens. That's the most stupidest thing to ever do. Take your time, let the market come to you. Another scenario is that this wave 5 is not completely ended yet, and we still could be heading towards the upside a little bit more. And the way I see this is essentially, you know, this could be a possible, you know, inverted head and shoulder pattern right here. So we're gonna essentially see the market come down a little bit more, retest that neckline, go up one more time, and then that will basically complete and shoot down. So that's another scenario. So, you know, wait for whatever scenario to happen. We have two ways to enter. One, once this market structure has been broken. Two, if there's a continuation, we want to see a nice 3 waves followed by a price action around this area to then give us one more to the upside. And that way we're prepared in both scenarios. Okay. Now remember, this is our validation level for this wave 3. If the market goes way beyond this, then this is considered as something else, which I will explain in my next video. Other than that, I don't want to give too much away. I do have other annotations of this chart, but obviously that's for people that have paid for the mentorship. The reason why I've had not a lot of people, but 1 or 2 people that have asked me, yo, why do you charge that much? Would you rather tell me, or would you guys need to tell me, would you rather me charge you £300 courses, £500 courses, and you don't get the quality of education or mentorship that you want? Or would you rather have something where it's optional? It gives you the choice. Meaning, you pay me £35 a month or £15 a month. You get access to a private Discord with all the educational content that I provide. Right? And you get to decide when you want to leave. That's it. You get to decide when you want to leave. Alright? So, I'm not going to sit here and say, you know, um, join. I don't need people to join. You know, I enjoy making YouTube videos anyway. So this is just something, you know, I just love doing on a weekly basis. And yeah, man. But anyway, nevertheless, I'm not here to really do anything mad. Um, I just gave you guys a sort of demonstration of how I analyze the markets and stuff like that. At the same time, give you guys a little one or two little secret tips, stuff like that. But I hope you guys did enjoy. Please do like, comment, share, and subscribe. I do have a Patreon that is there for people that are interested in mentorship. You guys will have access to my private Discord. And yeah, I see you guys on to the next one. Wassalamu alaikum wa rahmatullahi wa barakatuh.